Hey guys, Dave Keller here with Market Misbehavior, and I'm often talking about the FAANG stocks, or what I call the FANMAG stocks. Those are those 6 mega cap tech consumer communications names that everyone wants to know about. They're so big, they have a huge impact on the market. So what we're going to do today is look at each of the 6 stocks individually, look at them together as an index, talk about which one may be setting up the best between now and year end. Okay, so today we're going to be talking about the FAANG names, or what I call the FANMAG stocks. 6 names that each on their own have a huge impact, but together those 6 stocks are an outweighed influence on a lot of the sector ETFs, and particularly the market as a whole, especially the NASDAQ, when you're looking at the overall performance trends. But what we're going to learn today as we look at the charts is that they are not 6 of the same stock. The 6 names are actually pursuing some relatively differing paths right now in recent weeks and months. We're going to talk about what the trends have been up until now and which stocks are setting up the most effectively between now and year end. As a reminder, if this sort of thinking about investor decision making, behavioral finance, technical analysis, trend, momentum, breadth, sentiment, all of that is of interest to you, I hope you'll hit subscribe. It'd be great to have you along this journey with us. Also, give the video a like if you like it. We'd very much appreciate that back. Finally, put a comment below the video. Which of the 6 FANMAG stocks do you think is setting up the best between now and year end? Let's look at the charts. Okay, so we're going to start with the FANG Plus Index. This is put out by the New York Stock Exchange. On StockCharts, it's $NYFANG, but it may have a different ticker if you're looking at a different platform. There's no real consistent way you refer to indexes, but that is the FANG Plus Index. So it's sort of like FANG and FANG-like stocks. So things like Twitter are in this index. The Chinese internet names, some of those are in there. So it's sort of a mix of FANG and FANG-like things, sort of the mega cap tech consumer communications trade. I like to boil things down to what I call the FANMAG stocks, and that's FANMAG. Facebook, Amazon, Netflix, Microsoft, Apple, and Alphabet, or Google as the 6 names, because I think those are a good representation of the FANG, the most FANgy of the FANG-like stocks out there, if that is a way to put it. So it's interesting when you look at the FANG Plus Index, it's coming off of new all-time highs and broke to new highs in July, again in not in August, but it did in early September, and then once again now in early October. So it's actually outperforming or going up a little better than the S&P over this time. But what's interesting is if you look at the relative strength, the ratio of the FANG Plus Index versus the S&P 500 for the last 12 months, it's actually flat. It's had some periods of outperformance, periods of underperformance, but overall it's netting out to a market performer. You really haven't gained anything from owning this index of stocks versus owning the S&P 500. But what's interesting is if you look at the 6 names that make up this FANMAG group, you can find it very different. I would bucket into the strong uptrends, which would be the first 3 stocks, these sort of middle of the road names, of which there are 2, and 1 that is currently underperforming. And they've really diverged in the last 6 to 8 weeks. So let's look at that right portion of the chart on each one of these. So in the first 3, you have the 3 strongest trends. These are the stocks that are consistently making new highs. While the S&P is testing all-time highs, these stocks are doing it. They are blowing to new all-time highs. And the first one is probably the strongest, which is Netflix. Netflix has been in a consolidation period, February through August. Now, a lot of the FANG names led into February and then started to underperform. The relative strength of Netflix kind of shows that, sort of stabilized here over the summer and now starting to reemerge with Netflix performing very well over the last 2 months from mid-August to late October. And so overall, higher highs, higher lows, the trend is positive. Microsoft is number 1, and the next 2, Microsoft and Alphabet, are actually having pretty good days today. We're recording this on Wednesday, October 27th. Both of them moving higher fairly significantly on earnings this week. Netflix reported last week. You have Microsoft and Alphabet actually reporting yesterday on Tuesday. So Microsoft powering through to new highs, getting above 310, becoming overbought just recently. Alphabet is actually testing new all-time high, was trading above it almost to 3,000, but not quite doing it. On the chart of Alphabet, by the way, I would focus on the fact that we are not just that we're testing new all-time highs, but hitting a big round number. It seems like kind of a funny thing when you look at stocks breaking to 1,000, 2,000, 3,000, $110. But I will guarantee you that this is been proven to be an important impact, an important phenomenon on the markets. Stocks often rotate and gravitate toward big round numbers because the traders and individuals that set trades often gravitate to those big round numbers. When you add another digit or subtract a digit from a stock's price, it has an impact on the investors and how they think about it. So I would pay attention as Alphabet gets up to 3,000, by the way. Then we get to the group of two stocks that are sort of choppy sideways. Apple is number 4, and what I'm seeing here is a series of ranges. We had a range back in October, September and October, rotated to the upside and broke out of that congestion area. Yet another sort of range-bound pattern, January, February, March, April, and then into May, where you had lower highs and higher lows that resolved to the upside June into July. You had a shorter-term pattern, sort of a pennant pattern here that resolved to the upside. And now, once again, I would argue Apple's in a bit of a range. On the upside, you have around 157, 157.50. On the lower end, around 138 or 139, and the stock is within that range, right in the middle of it. I would be interested to see which way we break out. Do we break above 157.50 or below 137, 138? Whichever way we break out, I would expect the next big move to be in that direction. You'll also notice, now that we talked about consolidation patterns, how Amazon is in one of its own. On a price basis, Amazon really hasn't gone anywhere in the last 12 months. It's been choppy, but overall the relative strength has been fairly negative because the price has been flat while the market itself has been going higher. The S&P and the NASDAQ obviously making fairly consistent new all-time highs into September, and now once again testing those here in late October. Compare that to the chart of Amazon with lower highs and higher lows or stable lows. You have sort of this consolidation pattern. Again, I'd be interested to see if we're able to break out of that pattern to the upside, which would be above a trend line using these previous highs, or below the lows around 3,200, taking the lows from recent price action. Now we get to what I would consider the negative outlier out of the 6, Facebook. So this is the stock out of all of them. This is the only one of the 6 that is trading below its 200-day moving average. The only one that's put in a fairly significant lower high and a lower low after having a consistent pattern of higher highs into September. This is the only one that has had a clear transition from a relative outperformance stage through early September to a period of relative underperformance from early September to late October. So out of all of these, this is the one that's certainly, I think, differentiating itself by breaking down through support levels and showing a clear pattern of distribution. So looking at those 6 stocks as I'm describing them and their patterns, I would definitely not be thinking of this as the most optimal chart between now and year end, because Facebook is demonstrating its inability to hold support. Same issue I have with Amazon and Apple. They could end up emerging in a position of strength, but right now I see them as consolidating while other stocks are doing pretty well. Problem I have with things like Alphabet and things like Microsoft is they're potentially a little too overextended, right? These are stocks that have had a pretty good run, especially accelerating to the upside just recently, in Alphabet's case, testing all-time highs, which is probably my second favorite. Microsoft, arguably a little too overextended with a consistent run higher. That leaves me to what I would see is probably the most attractive of the 6, Netflix, because it's had this clear rotation from consolidation phase to accumulation phase. I like charts that tell the story of buyers taking control and more demand than supply, more optimism than pessimism, and people willing to accumulate shares over a period of not just days, but weeks and months. And I think that's what we're seeing with the chart of Netflix. So that's it. That's my quick take on the 6 stocks within the FANMAG group, how the FANG Plus Index has overall been a market performer, but within the 6 stocks of the FANMAG names, you can see that some are actually doing very well, some are doing very poorly on a technical basis, particularly on a relative basis. We highlighted the one that I think is most setting up best between now and year end, and that's Netflix. Which of those 6 do you see as setting up best between now and the end of the year 2021? Let me know in the comments below. Also, if you appreciated this video, give it a thumbs up. We would very much appreciate that back. Finally, if you like this thinking about technical analysis, investor decision-making, behavior, all the above, if you find that of interest, hit subscribe. It'd be great to have you along this journey with us. For everyone at Market Misbehavior, I'm Dave Keller. Be well, stay safe, have a good night.